Oh boy, here we go again. It's about that time of day again here, folks. Back in the action. Monday evening, March the 22nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it is so great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, we got the NASDAQ, and the gold on our radar for tomorrow. Boy, speaking of tomorrow, had some pretty big moves on the charts today. Popping higher on the E-mini, popping higher on the NASDAQ, and grinding their way higher on the gold. But here's my question for you. Can these buyers, do they really have control of this market right now? Because, I mean, after all, we saw the E-minis, the S&P, and the NASDAQ grinds higher today. Gold takes lift off its lows this afternoon. Are these buyers legit? Can they hold this pullback right now? Because I gotta be honest, looking at charts tonight, it doesn't look like the buy side is going to be the easier side to trade for Tuesday. I gotta say, I'm looking for shorts, I'm looking for reversals, I'm looking for potentially moves right back down for some big targets below tomorrow. Not to worry, we're gonna break all this down into bite-sized pieces. I'll show you why I'm looking in certain locations, and we'll talk all about the best trade setups I'm tracking for tomorrow. Before we jump in though and get this video going tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day. I don't want you to miss tomorrow's video newsletter, so make sure you subscribe to our YouTube channel, and when you do, hit that little bell icon so you always get notified every time I publish something new. And also too, if you guys have any questions for me, drop those questions for me in the comment section below. I'll get them answered as soon as possible. And if you like the video as much as I enjoy making it, do me a big favor, hit that like button, hit that thumbs up button here on this video tonight. Always appreciate you guys tuning in, supporting this YouTube channel by subscribing, dropping those questions in the comment section, and hitting that thumbs up if you guys enjoy the content here on this video newsletter. But enough of the introduction though. Time is ticking. First day back after quadruple witching break. What are we looking at going into the session for tomorrow? Now, like I mentioned in the introduction, we've got all the markets, all three of these popping higher. E-mini popping higher, NASDAQ popping higher, gold not as strong obviously, but gold popping higher here as well. But here's the big question though. Can these buyers actually hold this? I've got some concerns, right? We're definitely bullish right now across the board, but I've got some concerns, right? I've got a quad measured move on the S&P. I have a big measured move overshoot on the NASDAQ. And we got this range on the gold, which looks very suspicious, acting as a price magnet. I'll tell you, a lot of these markets, well, they're all bullish, but they're not giving me a lot of options right now to be a buyer. And whenever I find myself in a situation where the buyers are kind of boxed in, and boxed in, I start leaning on the sell side just because of lack of any real reliable setups on the buy side right now. So we're going to break this down into small bite-sized pieces. We'll talk about all these specific setups on the gold, the NASDAQ, and the S&P. Before we jump in though, let's make sure we check the schedule for tomorrow because we have one of the busiest news weeks of probably not the year, but of the month of March. This is the fourth week of the month of March right now. And so as you guys know, as we get closer to the end of the month of March, we're going to start seeing more volatility enter these markets. I know, right? As if we could get more volatile right now. This week, probably not going to be the big volatile week. It'll probably be next week. But as we start to get to the latter half of this week, the 24th, 25th, and 26th, we do anticipate that last week of trading, the month of March, big month of the year, expect more volatility as we get later on in this week. Now, there's a lot of news on the schedule here this week. We're going to hear from Jerome Powell tomorrow, right? He'll be speaking at 12 o'clock Eastern time. We got new home sales at 10 o'clock tomorrow. Those are going to be the big news events for tomorrow. Don't forget that 10 o'clock news report is definitely going to be on our radar. 10 o'clock is always a good time to be at your desk looking for trade setups. You'll definitely want to join us tomorrow morning in our trade room around that 10 o'clock hour. We'll obviously open up at 8 o'clock Eastern time like we always do. And then we got Jerome Powell at 12 Eastern time. This is that 2-day testimony. He'll be in front of the Senate tomorrow at noon. He'll be in front of the House right at 10 o'clock o'clock on Wednesday. But as we look at tomorrow's trading session, these are the two big news events we have to worry about for tomorrow. 10 o'clock, right on top of that big round number at 10 a.m. And, of course, Jerome Powell later on in the morning. We're probably not going to have to worry too much about Powell tomorrow. Our big hurdle will be trading around that news number at 10 o'clock Eastern time. So don't forget, tomorrow morning, 8 o'clock Eastern time, we open up our trade room. We should be able to find some good setups before that news comes out. And then, of course, after that news comes out, before things slow down, head of that Powell speech as we go into lunch tomorrow afternoon. Remember, we do hear more from him later on this week. We've got durable goods, and we got Jerome Powell on Wednesday. We got GDP on Thursday, and personal income on Friday. It's going to be a very busy news week. Tomorrow, though, 10 o'clock Eastern time is the big news we want to make sure we're ready for. And, of course, as we go into lunch, that 12 p.m. testimony on Capitol Hill. It's a virtual testimony, of course, with the lockdown still in play right now. So, virtual testimony tomorrow at 12 o'clock Eastern time. If you could only be at your desk for 1 hour tomorrow, I would say probably that 10 o'clock to 11 o'clock block. You get that big news at 10 o'clock Eastern time. Lately, the best setups have been that block from 10 o'clock to 11 o'clock. So make sure you're there with us tomorrow morning. We'll open up at 8 o'clock in the trade room. We'll get the charts all prepped up. Hopefully, we'll find some good setups before that news comes out. And then, of course, we'll try to kind of thread the needle between that 10 o'clock and 12 o'clock block tomorrow before that news comes out at noon from Jerome Powell. That's the schedule here for tomorrow. I'll be here with you guys all week here this week. Hope I'll see you tomorrow morning in our trade room at 8 o'clock Eastern time. Let's get back to our charts here tonight. Get the S&P, got the NASDAQ, and the gold. All three of these markets are bullish right now, as you can see. But as I mentioned before, all three of these markets are looking a little bit difficult to pull the trigger to be a buyer right now. Let's start first with the S&P 500. S&P 500, what happened today? Well, as you can see, the market opened up with a range to begin the day, and it pretty much just kind of grinded higher. You'll notice it never really gave us any real pullbacks the entire session. Opened up in a range, breaks out into a range, breaks out into a range, breaks out and finishes their quad measured move. That's a big detail because most of the time, not every time, even a broken clock is right twice a day, but most of the time when a market goes 1, 2, 3, 4 legs in one direction, that is usually just about as far as that market is going. What you'll notice, though, is they overshot that measured move. Think of this area now as a little resistance zone right above that 42 up to that 44 area. So if I'm a buyer right now, right? If I want to be a buyer, I have to worry about buying into that measured move. There isn't a very good risk reward ratio on this chart right now to be a buyer. We've gone 4 legs up. The day began with a range. The range will act as a price magnet. I'll tell you, very difficult to justify being a buyer right now on this S&P unless we can get another leg higher. Unless we can get some momentum in favor of the buyers right now, very difficult to want to be a buyer on this. I would love to get short on this market. There are three specific types of short setups I'm looking for tomorrow. My favorite one will be what I call a nested or a nested failure. So as the market pulls back here, the buyers have all of the momentum, right? They get all that momentum at their back. I'd like to get these buyers to try once, try twice, draw a channel off of those lows, and sell short off of that high. This would be, if the trading gods are listening up there right for tomorrow, this would be the best setup I could possibly look for to get short off these highs. Let the buyers try a few times. Again, they've got all of this resistance up overhead. They made a very nice strong run higher today, so they definitely have control. But again, 4 legs up. I'm definitely suspicious. I'm weary of buying this high until we see some more evidence these buyers want more. So one of my favorite short setups for tomorrow, I call these, it's basically a failure pattern. It's basically a nested failure as the buyers try once, buyers try twice. I'm using this kind of hidden channel technique to sell off the high of that hidden channel. Another one of my favorite short setups for tomorrow would be if we do go back up and retest these highs. Buyers, of course, still have control. Now with the buyers in control still, I look for what I call a crown reversal pattern. A crown reversal pattern is pretty simple. When the buyers retest that high, I can now wait for them to come back, try once, try twice here, and I can look for a trap to sell short off of that high. So again, buyers do have control. So I do want to make sure I give them the benefit of the doubt, right? Buyers try once, buyers try twice, trap high for that short back down. One of my favorite reversal patterns called a crown reversal pattern. We'll grab that off the highs if we can get that set up here for tomorrow. And then the third kind of scenario here to get short on the S&P tomorrow would be a 1, 2, 3 reversal pattern into a hidden channel pullback. 1, 2, 3 reversal into a hidden channel pullback. In this situation, now those bears have control, right? Now they've got that 1, 2, 3. They've taken control of that momentum, and I want to sell high, right, off the high of this channel. Now, every once in a while, the market will just collapse and run back down. If the market does collapse and run lower on strength overnight, that's your sign now to look for an aggressive entry with what I call a 2-try trap. Trap patterns are great because they allow you to get in at the highest possible point on a relatively shallow pullback. And don't forget, there's always bonus points if you can combine that trap off the high, right, of a hidden channel. So really, 3, 4 different setups here to sell short off this high. The one of them is that nested failure. Buyers try once, pull back, buyers try twice, mark that high, mark that low, and we're selling off the top of that channel. That channel could obviously be a little bit steeper. It could be a little flatter than this, but that's one of the setups I'm tracking here for tomorrow. The other would be, again, that move up, that retest the high. Buyers try once, buyers try twice. We call these crown reversal setups. One of my favorite reversals there. Or it's that 1, 2, 3 move lower. Once those bears take control with that 1, 2, 3 reversal, I'm going to mark up that low, mark up that high, and you know me, I'm looking for the first test off the high of that channel, or if it really dumps, right, strong move down, shallow pullback, lower low with that trap high there, right? So either 2-try trap, right, 2-try trap, or a 1, 2, 3 reversal into a hidden channel pullback. So that's what I would like to see here for tomorrow, using this range as a magnet, using our weekend gap as a magnet. And don't forget, what is a weekend gap? A weekend gap is whenever we have a gap between the closing price on Friday afternoon and the opening price on Sunday evening, right? You're going to see 3 of those tonight on this video. And those weekend gaps, they will act like price magnets usually the entire week. Remember we said last week, or week before quad witching break, weekend gaps usually get filled before the closing bell on Wednesday. Will tomorrow be that day? We'll wait and see how we do. Now, how about a buy setup right now? How can I buy this market? Well, again, as I mentioned before, I'm concerned about this measured move. That 4-legged move is really, really difficult to want to buy right into. We do have a lot of bullishness, which means the odds are still pretty good. We're going to get that retest of that high. The hard part, though, is there's not a lot of meat left in the bone up there, right? It's difficult to justify getting in long right now on the S&P. If I did want to buy this thing, though, what would be some options here for us? Well, I would definitely want to get a pullback down to the support area here at 23.5, 19.5, right? That area is a really nice support area. The problem is, though, if we get that deep of a pullback now, this momentum is going to feel very, very strong. And so what I'll typically do in these situations is I'll draw a trend line overhead. I'll wait for bears to try once, try twice, and try to use that trend line. We call these 2-legged pullbacks, 1, 2, try to use that trend line as an area of support for that run back higher. See what I'm doing here? I'm kind of playing the game against these sellers, right? I'm letting the bears try twice on this and then using that trend line coming down as a key area of support. We can trap in the bears. We used our stop losses as fuel and run this thing back up to retest the high. The bottom line is whether or not we can use that trend line or not, I'm going to want to see us pull back into this buy zone down here, a very good looking support area, and I've got to let these bears, right, really kind of wrap that rope around their neck so I can shoot this thing back up to retest the highs. We will need to use those stop losses as fuel to run this thing back up to retest the high because, right now there simply isn't a lot of incentive for me to buy this pullback right now. I'd rather get it to go a lower price, wrap in those bears twice, and then buy into those stop losses for that run back up to retest the high. Another option would be a breakout running higher. Now, the good news is we have a lot of open space overhead at 39.70 3/4. That's kind of that. It's kind of that false top up there, the all-time highs at 39.78 half. Get that big top there, 39.70. So 39.70 is a very good level to shoot for here for those buyers. The problem is, though, again, I don't want to buy this pullback right now. I want to wait for maybe a 1, 2, 3 breakout. If I delete this channel real quickly here and we get a move up, retest the high, they pull back to the moving average, they hold the moving average and jump, right? If I can get this 1, 2, 3 breakout pattern going higher, then I can easily mark up that high, I can easily mark up that low, and I can confidently now buy that first pullback to the low of that hidden channel. Again, we call these 1, 2, 3 breakouts into hidden channel pullback. Remember, you want the first test of the low of that channel. And again, the target's going to be up at that 39.70 area. I wouldn't go shooting for the moon at 39.78, but 39.70 3/4 definitely appears to be a really good spot there for those buyers. Another scenario would be that 2-try trap I talked about, right? So if we don't get the 1, 2, 3, and for whatever reason, the market simply pops and runs here, I will definitely see that strength going higher as a sign that buyers are trying to retest these all-time highs. I don't want to chase after it going higher, but I will look for that 2-try trap pattern. Strong move up, shallow pullback, higher high in price. Trap low is always a great chance to buy. And don't forget, again, there's an added bonus there if you can add in that hidden channel drawn off the highs. If I can combine a trap low off the low of that hidden channel, that is a great buy setup. So again, I'm looking for a short. I think the short side is the easier side here for tomorrow, but at the same time, though, I am not afraid of getting long here as long as we can see a little bit more edge for these buyers, right? A little more momentum for these buyers. Now, please don't forget, I have covered a lot of details so far in this video, talking about failures and traps and pullbacks and breakouts. Don't forget, I cover all the details of all of these entry setups in our free trading course. So if you want a deeper dive into all these entry patterns, I'll send you lots of examples of reversals and failures and traps and breakouts as all part of that free trading course. So make sure you grab that link that pops up there in the upper right-hand corner. Grab the free course. You're going to love the free course. It talks all about my favorite entry setups. So that way, when I see a nested failure with a short off the high of that channel, I go into a lot more detail of all of my favorite entry patterns, like failures, like traps, reversals, and breakouts. So grab that free trading course linked up in the upper right-hand corner, a little pop-up there. Get registered for the free trading classes. That way, the next time we work together, you'll really know exactly what I'm talking about when I talk about these entry setups on these charts. So S&P is looking pretty good, though. S&P looks good. Let's keep going. How about some NASDAQ? Now, NASDAQ is probably the more obvious market here that has a little bit difficulty right now going higher. You can see the NASDAQ is obviously bullish. There's no question about direction right now on the NASDAQ. The NASDAQ, though, goes 1, to 3 legs up. With all of that strength going higher here, you would think the buyers would have no problem double topping at that high. But you know what happens? They fail to retest that high. That creates a falling resistance trend line now overhead. And now we have a very similar situation we talked about on the S&P 500, right? We've got that measured move. The measured move is resistance in a trending environment. And we also have that trend line coming down overhead. If I'm a buyer right now, how exactly do I justify buying into all of that overhead resistance? It's not a very good risk-reward ratio. There's not a lot of meat on the bone here to be a buyer, which means, like I said earlier, when I don't have a lot of options to get long, by default, it's a good idea to start looking for the short side. Now, of course, the short side here is easier said than done because just like the S&P, the buyers have all of the momentum right now on this market. So I can't just get short on something that's bullish just because I'm running into overhead resistance. What I can do, though, is I can look for some of those reversal patterns, those failure patterns that we talked about on the E-mini S&P. For example, I know I have that trend line coming down. So as this thing pulls back here, if I can get bulls trying once, bulls trying twice, I can draw that trend line off those lows, up around that high. And again, that will make for a beautiful short using a nested failure pattern with that hidden channel, right? Combine that trend line overhead. That is a great looking short setup here to get short on the NASDAQ. Again, we're still bullish, so I do have to respect the buyers. Give them a couple shots to keep this market going higher, but don't be afraid to pull the trigger, right, and short the top of that range off the top of that channel. And of course, our target here is all the way back down to those lows, right? Just like the S&P, the NASDAQ has a gap between the closing price on Friday and the opening price on Sunday. There is also a big range down there, which will always be an easy magnet here for us for the sell side, right? So we have this big range down there from late last week. That will act as a magnet as well. Now, a lot like the S&P as well, if the buyers, if they can hold this market and retest that high, good for them, but it still doesn't help us to buy anymore, right? I'm not going to buy just because they break out to new highs here. I would still be looking for those crown reversal patterns, right? Those 1 try for the bulls, 2 try for the bulls, that trap high, and that short back down. That is another one of my favorite setups, a reversal pattern, right, called a crown reversal off of that high. And again, this one is if they go back and actually retest that high of day, right? In that case, the buyers, again, still have control. But again, because of all of that overhead resistance, because we are 3 legs up, because of that gap and that range down bottom, and really because of the lack of really open space to be a buyer, it's worth considering looking for a nice, reliable short setup like a crown reversal there. At the same time, if the market was to pull up and then jump off of that trend line, that creates a 1, 2, 3 reversal pattern. That 1, 2, 3 reversal now tells me the bears have control. We know where they're trying to go. They want to get back down to fill that range magnet, get that weekend gap hit. But now I don't want to chase the market lower. I'm going to mark that low. I'm going to mark that high. And as always, I want the first test right off the high of that channel. Now, of course, don't forget, right? I'm not just blindly selling the top of that channel. I'll look for setups like buyer failures, right? Bear pullbacks, strength moves, trap moves coming off the high of that. And remember, each of these entry setups, I'm not going to go into all the details right now because this video is already long enough, but if you want to learn more about failure setups, pullback setups, strength setups, trap setups, the patterns we'll look for to actually trigger the entry off the high of that channel, all those smaller details are covered in that free trading course. So grab that free course link in the upper right-hand corner if you want to learn all the specific entry techniques we use every morning in our trade room. And then again, if the market dumps, right, if it just rolls over and really collapses here, don't be afraid to grab that more aggressive entry, that strong move down, that shallow pullback, that lower low in price. Traps, baby. Traps are always going to be on our radar whenever we see a real strong dump, right? Strong move down. And again, don't be afraid to grab those lows, grab those highs. Extra bonus points if you can grab that short off the high of a bear channel. So pretty easy. I think pretty easy plan here to get short here on the NASDAQ for tomorrow. The range below us acts as a magnet. The weekend gap below us acts as a magnet. We'll see if we can get that signal we need here to get short off the highs here overnight or early tomorrow morning. How would I buy this market? So here's the challenging part. There really isn't, on the S&P, I mentioned we could go lower and then get a nested there, but that doesn't solve this problem. Okay, that's probably the hardest part about the NASDAQ here is it's very difficult to find cover or to find a way around this trend line. A lot of times trend lines are relatively steep, right? So you can get around that trend line relatively easily, right? A lot of times those trend lines, I can get around them relatively easily and I can use those trend lines as support. The problem with this one, though, is you'll notice there's no hiding. This thing really is almost flat. And so if I get back above it here, that's just not a good, again, there's not much incentive up there for someone like me to buy that, right? This is not a lot of profit potential. And with that measured move right there, that is a dangerous place to be a buyer. So, the one big difference here between the S&P and the NASDAQ is that falling level of resistance. We definitely have the short side covered. To be a buyer, though, I'm going to have to see a breakout. And if we do see a breakout here, watch out because we have a ton of resistance here overhead. That 271 up to 348. Get a ton of big tops up top, right? Right? Top, right? There's a bunch of tops up there that are going to act as a headwind, right, as the market goes higher. So if I can get that strong move higher, what's my concern? My concern is I'm running right into an area of resistance. So I've got one of my favorite entry setups is perfect whenever we're running into overhead resistance, and that's the trap setup, right? Trap setups are always excellent patterns, entry triggers, when I'm worried about buying into some area of resistance. So if we do get that 1, 2, and 3 breakout here, again, if we do get that same 1, 2, 3 go, which is really what we need right now to give us the proof these buyers want to keep going, if I draw my channel off the highs and bring it down off that low, you'll notice I am right into that overhead area of resistance. So what you want to look for is, as the market pushes higher, is to really try to focus on some traps on here, right? So mark that high, mark that low, find that prior swing, and make sure we're using trap entries as the market goes higher. Again, a lot of this is because I just don't want to buy into that overhead resistance, a big area of resistance there up overhead. Now, this might be even easier, right? It may just run up for us. We may get that strong run up. We may get that shallow pullback, that higher high, and we may get a beautiful trap with that 2-try trap setup. So it may not be very difficult to find. And again, if you can add a trend line off the high, off the low, definitely combine that trap low with the low, right, of that channel here. So the buy side looks good. The sell side looks pretty good. I think the buy side, again, without some strength running higher here, it's really difficult to find a high percentage trade here on the NASDAQ. One more thing you want to consider for tomorrow is if the market was to go sideways, right? So, and we didn't talk about this in the S&P, but this will also apply to the S&P 500. But let's say, for example, the market pulls back, goes back up again. Let's say, for example, we pull back, we go up, and we start trading sideways here. Now, if the market starts to cruise sideways here for us, that's a very different story now. Now, that range magnet now is now moved up higher. So if we do start to see the market going sideways here, right, bullish market, obviously, into a trading range, what do we do with a bull market into a range? We find levels of support below the range, and we combine those levels of support with what we call failure setups. We wait to get below that support area. We do not try to pick a bottom, right? Picking the bottoms, picking tops, that's a rookie game. We know better than that, right? Very difficult to predict the tops and bottoms of these markets. So it's a better idea to wait for that breakout, wait for sellers to try to sell this thing short here, and then once they start to fail, we can now use their stop losses as fuel, and we can buy going right back up into that trading range. Does that make sense? Right? So if the market goes sideways here, in a bull market with a range, you want to find those levels of support below the range, and they could be a swing low, a prior reversal line low, right? Any level of support below that range will work. I have some favorites, obviously, we'll talk about tomorrow morning once we see this information on the chart, but I'm looking for failure patterns, right? Failure patterns to buy at support levels below that trading range. We'll know more, obviously, tomorrow once we actually see the range, and we'll find those support levels together tomorrow morning in our trade room. But now we get a pretty good plan there for the NASDAQ. Again, not many options here right now to be a buyer, which means I have to be thinking about the sell side here on the NQ. Wrapping things up here tonight on the video, let's get back to the gold here. The yellow metal has been grindy and really rangy and just choppy over the past few weeks. We've had, interest rates in the rise, bond yields in the rise. Everybody's, you can definitely tell gold is waiting on something right now. Maybe it's Powell tomorrow and Wednesday, but definitely gold has definitely been one of the more choppier markets out of all three of these over the past few weeks. I'm sure you probably have noticed that if you're a gold trader like we are in our trade room. Now, what happened on the gold? Well, you can see in the chart here that gold takes off the downside, right? Little gap at the open. Again, that's the gap between last Friday's close and Sunday's open, right? Friday closed at 5, Sunday opens at 6 p.m., right? Little tiny gap there. That will be a price magnet for the entire week. We'll keep an eye on that here in our trade room, and of course, I'll keep referring back to it on this newsletter here this week. We see a very strong move down. Anytime we see a strong move in one direction, we expect another leg in the same direction. They complete that measured move. And it's tough to see on this chart, but if I went down to a faster time frame, you would see this range that formed down here from 1730 down to that 1727. Anytime we have a trading range, that range acts as a magnet. It's very important that we realize, we understand, the bears have control of that move down into that trading range. Now, whenever I have a bear market into a trading range, what do? We find levels of resistance, such as trend lines, right? And we sell back down into that range again. Well, look what happened here. We got this big pop, right, above that trading range. Anytime I see a big pop in one direction, right, I have to expect another leg in the same direction. So the buyers now just completed that second leg. In other words, the buyers now have they accomplished their short-term objective. Now we should be able to look for this market to go back down into that trading range. The most important thing on this chart right now is who has control of momentum. Think about it. Who has control of momentum on the gold right now? Here's how I look at it. The bears have control. They took control on the way down. The buyers have to then take control back. And the only way the buyers take control back is with a 1, 2, 3 reversal, right? 1, 2, no. 1, 2, no, right? We don't have the buyers. If the buyers have control of this, they're doing a very good job at masking their intentions because this does not look like a bull market. That's why I said earlier, even though everything is rising higher right now, it just doesn't look good for these buyers right now. The E-minis are kind of quote-unquote overbought, if you will. And the gold, right? It looks to me like gold has a range acting as a magnet down there. The buyers got a nice gift, right? The buyers got that strong pop up. The sellers, of course, sold it right back down in, but it looks like what's happened is a strength of that pop higher was enough to kind of keep these buyers trying to go back up, retest that high, and now once we're here now we can start looking for that short going back down into that trading range. So that's what I'm thinking for tomorrow. Now, you can see the big elephant in the room, right? What's the big problem right now? The problem is we've got that rising support trend line. That rising support trend line is going to be the big challenge here as we go short. Now, whenever I have one of these kind of two-legged pullbacks, your best shot to short this thing is to go underneath it, come back, and sell off that trend line. We call these two-legged pullbacks, right? One-legged pullback, two-legged pullback, right? Hit the underbelly of that trend line for a short, going back down into that trading range. Remember, I talked about this earlier on the S&P, right? The S&P pulls back. It was a very similar pattern we talked about on the S&P. That is going to be one easy way for us to get short on the opposite side of this rising support trend line. I don't want to just take a failure pattern right now because there's just no guarantee we're going to go through that trend line right now. That's the problem, right? If I try to use my typical failure setup, which I love in range-bound markets, the problem with that specific setup right now is, again, you've got that trend line on the way. So I want to work around it, get underneath it, back up, and then come back down from there. That would be a much more reliable setup here. Again, using this quote-unquote two-legged pullback pattern, right, for the entry trigger on the opposite side. Now, what if the market runs higher? If the market runs higher here, again, we've got that weekend gap, and I wouldn't be surprised if they overshoot that gap and take out those highs. Now, if they take out those highs, what's the problem now? Yeah, the buyers might have control now, right? The buyers will look a whole lot better if they can go back and retest these highs. But am I really going to buy that right now? Am I going to buy that pullback off that high? No, of course not. Why? Because I'm buying right into those highs. So again, a very uncomfortable spot to be a buyer. So how do I sell off the high then? Right? How do I sell that high? Again, we're right at a great area of resistance, and in all reality, I don't need to be all the way up, right? I could be somewhere around this, 45.5 area. Just, get me in the vicinity of those highs right now. But if they do make that run higher here, I'm going to still have to worry about that trend line coming over, unfortunately. That's probably going to be the biggest problem we'll deal with. Momentum is very bullish, right? But we're up at an area of resistance, not a very desirable spot to be buying. So how do I play this game? How do I sell it with the buyers in control? I have to look for a reversal pattern. And my favorite reversal pattern is one of those crown reversals, right? Buyers try once, buyers try twice, trap high. I really like this short setup because it's going to do two things. One, it's going to give me a trap entry, which is always going to be your best entry setup when you're trying to avoid selling into a rising support trend line. Right? Traps are my go-to entry triggers whenever I'm worried about buying into resistance, like we saw earlier on the NASDAQ, right? Or selling into support, like this one on the gold. I also like this particular setup because it ropes in the buyers, right? It allows these buyers to foolishly dig their own grave with these highs. They're buying right into that high here. Horrible spot to be a buyer, but if I can see buyers trying a couple times, I can sell that trap high, let the buyers try twice, and hit them right where it hurts. All of those stop losses now for those buyers are hanging out right below that low. If we can get a nice strong signal candle there, this thing should have no problem running right back down into that trading range. And then last but not least here, if the market was, for example, to go back into that range and start going sideways again, that's one more scenario I want you guys to be ready for tomorrow. So if for some reason, right, the market goes up and comes crashing right back down in, and goes, of course, into a trading range, what do we do with a bear market into a range? We find levels of resistance overhead. Usually what will happen is you'll see something like this, right, where it'll pull back like that. You can mark up that high, mark up that high, and then that's your go-to area, right? Focus on selling short up around resistance levels. Again, that's the key. Resistance levels above the top of that trading range. Wait for that pop up. Get up into those areas of resistance. No, I am not trying to pick the absolute top of that move. That is a rookie's game. I'm going to wait for those buyers to come back, try to buy that pullback. Once I see buyers get in on that pullback, assuming I'm not inside the range, I now have a beautiful opportunity here to sell short with what I call a failure pattern, right? A buyer failure coming off the moving average at resistance levels above the range. The range acts as a magnet. That'd be a great way to sell short here on the way back down into that trading range. And if all hell breaks loose, right? Strong move down, pull back to the moving average, we roll right those lows, right? If I get one of those 1, 2, 3 reversals, 1, 2, 3 breakdowns, you know it, mark that low, mark that high. And again, first test is always the best test off the high of that channel. Remember, we don't worry so much about where that entry is. As long as I can get that 1, 2, 3 move, there'll be enough momentum at my back. You're almost guaranteed to get one more leg lower off the top of that channel. So wait for that 1, 2, 3 move, right? That 1, 2, 3. Look for that hidden channel at the highs of that channel. Great spot to get short there. And of course, we'll know more tomorrow once we get into our trade room. Now, last thing here, how do I buy this market? How do we buy this market? There are usually a couple ways to do it because, I'll tell you, if we go back into the range right now, I can't buy that. It's very bullish at that point, right? If the market runs back, for example, if we run back into that range here right now and we start going sideways, I can look for a crown reversal to buy off that low. That wouldn't be a horrible way to buy, right? I can wait for that. Remember, it's very bearish at this point, so you're going to want to wait for those bears to try at least twice before you buy back into those stops back up. That is going to be a difficult one to take, right? That will be one that will really take some patience because you don't want to force those reversals because at that point, it will be very bearish as we go lower. Really the easiest way to get long on this is to wait for a breakout. Wait for that move up. Wait for those buyers to hold that pullback, get a strong jump off the moving average. If I can get one of those 1, 2, 3 breakouts and run through these highs, well, now it's pretty obvious the buyers want more. We got another level up overhead here at 1754.2. That will be the objective. How do you get in, though? I don't want to chase it, right? I don't want to buy high here. I want to buy low. Mark that high, mark that low, right? And we'll focus on buying off that low. Again, 1, 2, 3 breakout pattern into the first pullback, right? Hidden channel pullback here. I'm looking for seller failures, bullish pullbacks, looking for strength moves, looking for traps off the low of that channel. Any of those entry setups that we talk about in our free trading course, right? Grab that link in the upper right-hand corner if you want access to it. All the trade setups we talk about, we can apply off the low of that, right, of that hidden channel. So we'll definitely watch that hidden channel and we'll look to get aggressive here on the entry off of that low. And as always, if the market just simply takes off to the upside, strong move higher, shallow pullback, higher high, a trap low will also be on our radar right there for tomorrow, right? So those are some options for us as we go higher. Be a whole lot easier to sell off that high right now, though. Buyers, again, they look good, but once you get a little bit closer up to the chart, though, you're beginning to realize here there's not a lot of easy ways to get long here. So can these buyers hold? Doesn't look good for tomorrow. We'll have to wait and see what we get, though, in the overnight. Once we see a few more candlesticks in the overnight Asian session, we'll know a lot more as we go into tomorrow's trading session. Speaking of tomorrow's trading session, please don't forget, it is so easy to come out and join us every morning in our trade room, 8 o'clock Eastern time. I would love to have you there, right there with us. Getting registered is very easy. I'll put all the information you guys need in a big button below this video tonight on the trading blog. So if you're here at sidewaysmarkets.com, if you're on the blog right now, there's a big button for you right below this video. If you're on the YouTube channel right now, I'll put all the membership links, including all the free trading course links in the description of this YouTube video. So grab the course, right? Grab the membership. I will see you tomorrow morning at the opening bell. If not, come back and see us tomorrow night. We're here all week this week. Quad witching is behind us. I know break time is over. Break time is over. That's all right. Back in the action here. I am very excited to be back with you guys here for the 4th week of the month of March. Hope you guys had a great break. We'll see you guys tomorrow morning at the opening bell, 8 o'clock Eastern time in our trade room. If not, you better come back and see me tomorrow night on the next edition of this nightly newsletter. As always, my name is Joseph. Thank you so much for tuning in. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.